everybody. All right, good evening, welcome. I want to thank everyone for coming this evening. This is a very challenging event to put together, but before we get into the actual event tonight, I do want to say a special thank you to Brooke Lace, our Chief Marketing Officer, and her team, Janelle and Karen. Thank you for doing this. A lot of logistics pulling this together. And Allison Myers, where is she? Allie, thank you for hosting us in this beautiful venue. So why are we here on a Tuesday night talking about personal lines insurance? I know it's a riveting topic that everyone wants to talk about, but kudos to all of you for being here. Let's talk about the genesis of this event. So during the wildfires and just after the wildfires, the number of phone calls that I received and my colleagues received about what's going on and claims and whatnot, I was shocked and more than a little frightened by the conversations we were having. Friends of my wife, she said, Jeff, you got to call this person. So I call them and say, okay, talk to me about your claim. What's going on? Well, I filed the claim, and now I'm getting calls from an attorney. I'm getting calls from public adjusters. I'm talking to my CPA. I'm talking to my banker. I'm talking to my attorney. And they're telling me all these things, and everything's conflicting. And my only response is, well, first of all, they are all wrong. I said, you're getting the worst advice possible. And I'm sharing these conversations with my colleagues around Venbrook, and they're saying, I'm hearing the same thing. We need to do something about this. We need to get ahead of this. We need to get ahead of this messaging. So in true Venbrook fashion, leading the industry, let's not only lead the industry with service and clients, and service to our clients and our relationships we have, but our thought leadership. Let's get out there and pull back the veil on the personal lines insurance marketplace and private risk. I'm not going to ask you anybody to raise your hand, but if you're anything like me, you buy your personal lines insurance policy, you buy your auto policy, your umbrella, and you stick it in a drawer, you pay your premiums, and you never think about it again. Until when the bill comes up the next year and you pay it again and you don't think about it. Even my wife's like, should we buy earthquake insurance? I'm like, well, I have absolutely no idea. She said, don't you do this for a living? I said, nope, not personal lines. I said, that's where the pros come in. I said, bring me a movie studio, I know what I'm doing. Bring me a fleet of jets, I know what I'm doing. But what we're here to do tonight is to move LA forward and help each of you understand what's going on in your homes and what's going on in the personal lines insurance space. So proactively, you're going to hear from Christina Oakes, who is our National Head of Private Risk and Personal Lines. She's going to talk to you about the policies that you should be having. She's going to talk to you about the coverages that you guys should be having. She's going to talk to you about what I just said, personal risk management. How should you give yourself peace of mind, going to bed knowing I've got the coverages, I've got the policies, but what else can I be doing proactively that should an event happen, I know that I will get back, I will recover as quickly as possible. And that's where Lou Pippin comes in, Venbrook's National Head of Claims. So when you do have a claim, we're going to talk about the timing of the claim, your expectations, how you engage with insurance companies, when to, and how to identify those bad actors that I just referred to. And should something eventually hit the fan, that's where Spencer Schneider comes in. Now, Spencer does not work for Venbrook, but he works with Venbrook. He's one of our most trusted advisors. He is an insurance policy expert. He's an attorney by trade, and he knows the ins and outs of coverages. So without further ado, because you didn't come here to hear from me, let's talk to this panel. So Christina, you're up first. You're on the chopping block. Talk to us about the biggest challenges that we are facing. It might be obvious, but lay it out there for us. What are the biggest challenges we're facing in the insurance business, personal lines?
Absolutely. Can you guys hear me okay? Wonderful. Well, thank you for coming out tonight. Without further ado, yes, the difficulties that we're seeing in, I call it private risk insurance, it's the residential individual side of things. Now we specialize with high net worth, ultra high net worth. So sometimes it's a little bit different when we're talking just home and auto versus a very diversified portfolio that could have, properties in varying states and things of that nature. Personal lines specifically, and it's not, I'll get into California specifics, but nationally, what we're seeing on property and auto side of things is obviously an uptick in claims. I can speak a little bit on the auto side. We're seeing more fatalities, we're seeing larger payouts, and it's kind of twofold when you think about it. If any of you used to have a flip phone or an old brick mobile phone and what that entailed versus having an iPhone, cars have gotten a lot more advanced with the technology and parts on them. So when we're talking about claims, fender benders, years ago that used to be maybe a few hundred, maybe $1,000 or so dollars, it's now several thousands of dollars because we're having to replace sensors and cameras and all the technology that's in the cars, which, yes, you would argue that it's there to make driving safer, but I've talked to a lot of carriers, and we're also finding that, are people relying too much on the safety equipment in their vehicles, where they're not, still manually looking over their shoulder? Are they not looking in the rearview mirror? Are we forgetting some of the old practices that we used to learn because, the car is going to tell me if something bad happens? Doesn't always play out that way, and then when something bad does happen, that's when we have to go to replace the parts that are starting to see a surge. When you talk about the liability side of it, I'll get into this also a little bit later, but nuclear verdicts are on the rise. For high net worth folks and ultra high net worth folks, you guys have a target on your back. If you're in an accident with someone, I had a client that was a surgeon and hit another individual that hit another individual. That's just going to go completely out of control when an injured party talks to an attorney, and where the liability suit can come from it. So we're seeing an uptick in liability claims. We're seeing an uptick in the cost to repair parts. So the auto insurance rates, unfortunately, I don't have the best news for you. We are going to continue to see them on the rise. On the property side of things, recent events is the number one teller, and Lou here from Oklahoma, we were having a conversation earlier today. The natural disasters that we're seeing across the nation, whether it be tornado, whether it be hurricane, whether it be flood, earthquake, and of course wildfire, Mother Nature has an axe to grind, and we are feeling the effects of that. And it's really hard to predict and figure out where that's going, but we have to stay vigilant, and we're gonna see some rate increases and more to come on that. I will pivot back to your questions.
Okay. So we know when it comes to our home and auto and perhaps art and jewelry and things that we have right in front of us, we know that we have to insure that. What do people often overlook when they're looking at their personal lines insurance programs?
Yeah, absolutely. You actually just hit the nail on the head. I would say the two things when looking at an advanced portfolio, the two things that slip through the cracks the most are going to be valuable articles. For anybody that was affected in the most recent fires, you saw in the news people abandoning their cars on the street, not even be able to get into their house to get anything out of it. For the folks that were in their house and were able to grab stuff, are you able to get large paintings off your wall quickly? Are you able to grab statues and put them into your car? Maybe you grab a stash of jewelry and you head out. But personal collections is probably the one thing that gets missed in most everybody's portfolio, just because you assume that it's in your homeowner's contract. And while it is, you are subject to special limits of liability. So, whether it be $2,500, whether it be $5,000, I have clients that have hundreds of $1,000s worth of wine or jewelry or sports memorabilia, and it's not scheduled, there's no blanket coverage. That is probably the number one thing that I see get lost in portfolios. In addition to that, umbrella and excess liability insurance. If you've heard those terms and you're familiar with what they are, that's really protecting someone's asset portfolio and overall net worth. It's not protecting the home and it's not protecting the cars. It's if you find yourself in a lawsuit, what could an attorney potentially get from you from an injured party? And I have clients that have net worth all over the place, and some of them don't have excess liability at all. Some of them may have only $1 or $2 million. If someone's net worth is north of $10 or $20 million, you're exposing yourself quite a bit. And you're really rolling the dice when you find yourself in a situation where someone is injured, whatever the case may be. And you're at that point, if the injured party is, rewarded damages, you could potentially have to liquidate your assets. You may have to have a lien be put on your home, garnish future wages to pay off those future damages owed to the party. So making sure that you're consulting with the right professional in what that asset portfolio looks like, and making sure that you have the right protection and coverage to make sure the left hand is talking to the right hand.
Well, let's stay on that topic for a second. And before we get there, this is interactive. If you hear something, you have a question, please feel free to raise your hand. If you don't feel comfortable asking a question in a big group, we're going to be mingling afterwards as well. But please make this as interactive as you'd like. So I talked about earthquake. We talked about values. When should somebody buy flood or earthquake, or what we call DIC? Before you answer that, in addition to that, how do you know you are properly insured to value for what you have, and how much umbrella limit should you buy?
I have to get you to repeat all those again
Okay,
at some
all right.
point, but
I got
starting
you.
with
Let's start with earthquake.
Yeah,
Earthquake
starting
and
with the
flood.
natural events. Earthquake and flood, it's a great topic, and very much pivots off of excess liability and the valuable collections. So we live in California. We all live here for a reason. It's gorgeous. It's one of the best places to live. However, there are a lot of risks present in the state, and earthquake is something I don't think anybody woke up on January 7th and thought, yep, today's the day, let me start packing the car up and making my way through the town. It's going to catch everybody off guard. Earthquake is something, just like wildfires, it's prevalent in the state. It's a risk that we face day in and day out. Earthquake is right there with it. We don't have any way of telling when the next big one's going to come. I was also talking to these gentlemen earlier about, we're feeling more 4s and 5s, especially out in the valley area, and it rattles you a little bit. But if we cross over to 6, 7, God forbid 8, cracked foundation, the questions that you should be asking is your home retrofitted? If it's not, should you be retrofitting it? The question of should you buy earthquake insurance or not, if you're asking me, the answer is absolutely. There's a risk and we can protect against it. It's never going to be mandated by your lender, and it's never going to be mandated by, well, never say never. It's not mandated by the state currently, so it's really an optional coverage for you as an insured to elect to purchase. And same thing with flood. The last couple of years, we're seeing unprecedented rainfall. We're seeing areas of California start to flood, and you do not have to have a beachfront property to experience flood. There's an old saying that if you have a zip code, you're subject to a flood event. So understand that earthquake and flood are carved out of your homeowner's contracts. So if it's something that you think you might face one day, it's something you should absolutely explore. I think there's a question. So earthquake, yes, there's a handful of standalone earthquake carriers that all they do is write earthquake insurance. And you're gonna find that the premiums and the coverages go hand in hand because that's the only risk that they're focusing on. So there's a couple of standalone carriers, and then when we talk about our E&S markets, our surplus lines markets, there's also contracts in those surplus lines markets that typically will cover larger total insurance value. So if I reference TIV, that's total insurance value of, say, a $20 or $30 million property, we'll usually get contracts for those in the E&S markets. A lot, depending on the contract, most earthquake insurance policies will also, or a lot of valuable article policies will also include an earthquake damage coverage to it.
Do you want me to start?
Not yet. Not yet. You wanted to respond.
No, insurance fraud has become a more significant problem, and it's being investigated more aggressively by the industry and various resources. Unfortunately, in time, we all pay for the, and we're not just talking about the fault claims, but the inflated value claims, which are just as fraudulent as, making up facts in order to recover under an insurance policy. And so we have a problem of increased premiums, but you also have the problem of shrinking markets and carriers leaving, particularly in light of the recent wildfire problem we've had in Southern California, and more standard line carriers and E&S markets deciding not to write in this state because of the payouts on the back end. So it's a real problem.
So let's talk about personal risk management for a second. So we've talked about the coverage and putting coverages, the contracts in place to protect your assets and your family. What should you be doing proactively with your home and home maintenance and other areas of personal risk, private risk management, should people think about when they're protect themselves?
Absolutely. So there are a lot of really great companies and resources, and I believe in all of your pamphlets there's going to be a USB drive that highlights some of them that, these resources and risk mitigation companies, they want to be called on the front end. They want to be called before the fire happens, before the flood happens. There's a lot of really great technology out there now, especially in California, investing in a fire suppression system. Some of the companies can put a ton of sensors around your home that's going to then release fire retardant and actual water sprinklers if it detects that there's a wildfire within a certain vicinity of your home. You see all the time on the news people outside with hoses, hosing off their house, where there's actually companies that can install that and do that. It's going to become, in my opinion, almost like having a smoke detector inside of the home, but doing your due diligence on the exterior of the home. CAL FIRE Resources, which I also reference in those guides, has a lot of great resources about home hardening for fire. Removing vegetation up to 5 feet from your house. The days of bark mulch were great, but maybe we do stone nowadays. I know Italian cypress trees are really aesthetically pleasing. They are probably the most flammable tree or bush you could have on your property. And it's not to say that you can't have this stuff, but maybe you don't have it right up against the house. When you look at the news and they do the side-by-side of Pacific Coast Highway and you see everything burnt and this house still standing and this house, those houses are going to be studied, and I would guess that there's some kind of fire suppression or mitigation or home hardening that was done on the front end. I think there's also conversations to be had that come claim time for these gentlemen to talk about. Every year, we've even talked about this, that, maybe you go around your house and you take photos of what's in your closet, in your drawers. If you're working with a broker, you should be having annual discussions about your portfolio year over year, especially when it comes to collections. Did you buy the wife a new anniversary gift this year, Christmas gift this year? Do we need to expand the jewelry collection that you have? Did you guys attend Art Basel? Did you buy any art while you were there? What is the car situation? Have we sold or bought new cars? Insurance isn't just, no offense, a set it and forget it. It is an ongoing conversation that should evolve year over year. Maybe every year it's somewhat stagnant, but I would wager a guess that every 5 or so years it's probably going to evolve. So doing your due diligence as an insured, documenting as much as possible, making sure that you have photos, something that you can, quickly grab and rely on, whether even it be a USB drive or what have you. Maybe we'll be talking about documentation, but it's really important to document all of the stuff. If you're buying high value stuff, save the bill of sales. Store it in a filing cabinet or in a fireproof box. Anything that's valuable to you or that's going to help aid in the conversation if something should go wrong, which nowadays it's not so much if, but when it goes wrong, you have it to reference.
So you broached it. I want to get to claims, but one more thing, get out your crystal ball. What does the next 5 or 10 years look like? So we talked about, clearing out brush around your house. When is that going to be a law and mandatory? We talked about trellises, right? We've had those issues with clients. We've said you've got to take that down. The client doesn't want to do it. Can't get coverage for it. What about the marketplace 5, 10 years from now? What is this going to look like?
So cut me off when I'm at my time, but the next 5 or 10 years, it's good. There's going to be a shift in the marketplace. Quite honestly, if you're asking my opinion, I really see it echoing kind of what healthcare did about 15 years ago, where you're going to be seeing higher deductible plans. You're going to think of it in the sense of a catastrophic event. Think of, cancer for your home, if you will, where the days of, having a $1,000 deductible and having a $5,000 water damage situation probably not going to exist anymore. I can tell you that a lot of carriers on the admitted side are fighting to install higher deductibles in their contracts, doing away with $1,000 and $2,500 deductibles. There's going to be a shift in the marketplace, I think, from a regulatory standpoint, where when I reference admitted carriers, that's your state-regulated carriers such as Travelers and Safeco and State Farm and Farmers. There's a lot of regulation with them. The Department of Insurance has a way of doing things that really kind of puts a noose around their neck. And I think the more that they get forced, the more you're going to see them exit the state. There is no law at the end of the day that says a carrier has to write in a given state. If a carrier finds that it's not profitable and they can't work with the Department of Insurance, they will exit, which we have obviously seen in the last several years. So the long and short of it, I see a lot more surplus lines, E&S markets. You're going to see a lot more Lloyd's of London, Evanston, Great Lakes type of contracts. There is going to be, minimum earned premium attached to them. There's going to be larger premiums attached to them, but there are still going to be markets for, your HO3 and your HO5 homeowners insurance. It's just going to look a little bit different, and I think a lot of the standard carriers you're used to seeing on TV. I don't know if they're going to have a presence here in the years to come. There's still a lot of carriers on the admitted side that are under moratorium post LA fires because they're really just taking a time out. They want to sit and reflect and figure out what their next move is, if they want to come back, how they're going to come back, what the capacity is going to look like, and kind of go from there.
So can you clarify surplus lines admitted versus not admitted?
Sure. So admitted, like I said, backed by the state, regulated by the state, they can't take rate increases without the Department of Insurance signing off on it. There's an auditing process in place. They have to think of it, they have to play by a certain set of rules that the Department of Insurance dictates within any given state. When you're talking about non-admitted, it's I don't want to call it the wild, wild west, but it's basically kind of is. It's a carrier that's basically able to look at a risk and they don't have to play by the same rules. They can say, hey, this house is in a wildfire score of 92. There's vegetation up against it. It's in a cul-de-sac. There's limited access to get in and out of the neighborhood. We'll offer terms on it. But they can do a lot more creative flexibility things within their contracts, such as doing a sublimit or installing a very high deductible potentially, and they can charge the premium that they see fit due to the reinsurance costs and everything else.
Thanks for clarifying that.
The other main distinction, if I could just add, is admitted carriers have the backstop of the California Insurance Guarantee Association. So in the event an admitted carrier becomes insolvent and disappears, is no longer available to meet their obligations, you have SIGA protection with an admitted carrier. With a non-admitted carrier, you don't have SIGA protection. So if a non-admitted carrier goes belly up, you lose out as a policyholder.
Which it's always a fair question to ask your broker if you are presented a surplus. Like, you can always ask for the AM Best rating. Most of the markets out there should be A- or above. They are financially strong and solvent. If you're ever shown something that's, a B or below, I would maybe steer away from it.
So let's talk about the dreaded claim process. So we heard all about the coverages and the risk management. We did all the right things, and the unthinkable happens. Lou, talk to us about the dreaded claim process. What are the expectations? What's the timing, and what misunderstandings do policyholders often have?
So, Jeff, the good news is claims rarely happen. So I started my career, so there was a question about fraud. So nowadays you see my little picture and it's Lou Pippin and CCO Venbrook, but at one point in time it was Lou Pippin, Fraud Investigator, State Insurance Fund. And it's funny, when I would make a phone call, invariably the first question was, well, Mr. Pippin, do I need a lawyer? Not yet, but let's talk, and I'll let you know. So, right, wildfires, hurricanes, catastrophic events. So there's claims process, and then there's catastrophic claims process. So not only do people, God forbid, get hurt, properties destroyed, news is made, but the process changes for sure. So each and every carrier scrambles. There is an absolute ongoing surge. Every carrier that writes in a state, whether again it's a wildfire, a hurricane, a flood, you've got 500, 1,000, 1,500, 10,000, whatever the number is, coming in a very, very short period of time. So that's a real problem for the carrier. The other problem is you've got, especially on the personal lines versus, say, even on the commercial lines. So the good news at Venbrook, we do both. We do personal and commercial. On the personal lines, oftentimes you have a more unsophisticated, claimant, because like Jeff, like Christina said, you buy a policy, you stick it in your drawer, you never need it until you do. And unfortunately, you call the guy that's been my career. I handle all the stuff that can't happen. And sadly, it does. And so, the reality is on the personal lines, so wait a second, you get a phone call, wait, oh God, I got to find it. Who do I call? You call, then, we're all getting slick. We're all getting, we're all technology savvy. So you make a phone call, it connects you here, connects you there, check the website, check our app. There's 1,000 different ways, but sometimes things get lost, even with the best of technology. So, at the end of the day, you've got this surge of claims coming in. You've got people with real needs that need something right now. You've got carriers that are scrambling to try and hire. So if anybody in the insurance community says, oh yeah, I've got staff for the California wildfires. Right, So what they're doing is we are scrambling. They're depending on our partners. We're leaning on all of us to, come in, adjust the claims as quickly as possible. So, there's a communication issue, there is, a little bit of training, and so you've got a lot of stakeholders that are involved in the claims process. So you're going to have someone knock on your door, ring your phone, a field adjuster. Someone's going to want to come out and they're going to want to assess the damage that has occurred to your property. So you go through that field adjuster may identify certain issues, whatever they may be, that he believes we need to get experts in here. So we may need a building consultant, we may need some kind of engineer, we may need a variety of other experts to assist us in creating a report that's going to be sent back to, generally speaking, a carrier. So you've got multiple parties involved in the claims process. You've got an urgency that most people don't deal with and don't quite understand. And then you get the dreaded, oh God, now I'm reading my policy. Oh, damn, wait a second. How much did I insure this for? Wait a second. And I've got a contractor here who's telling me it's going to be significantly more than that. Plus I've got, additional living expenses. Plus I've got some, other structures. Plus I've got, you've got all of these things. And realize, as importantly, this is a process. So I promise you, I'm a nice guy. I'm a heck of a nice guy. This is an adjustment. This is a settlement. So I've seen literally hundreds of policies. Hell, I've talked to Spencer about at least a dozen of them. It's black and white. It's all set forth in your policy. It's real clear, except when it's not. Except when I talk to 3 different lawyers, as I read something, I'm not sure I read that correctly. So at the end of the day, realize that when you're out there, part of your job as a policyholder is to settle a claim. So that means you get past the niceties, and we may go back and forth a little bit. I mean, this is somewhat of a negotiation. It's kind of a business deal. And, I think there's some people that don't like to, get involved with some kind of settlement or negotiation. And I think there can be confusion there where they think, well, my policy says I'm entitled to X, and that's not exactly the case. So, those are some of the things that happen in the claims process. This is being recorded, right? So, how do you advocate for yourself? Well, first things first, right? So, your policy. So, right. Sadly, as long as I've been in insurance, everything is covered by insurance. It's not. And sadly, some people are, well, I bought insurance. That's obviously covered. No. So, first of all, let's get past that. Let's truly find the policy. Let's read the policy. Let's try to understand the policy. Now, the adjustment, right? So, if you're in California Fair Plan, right, it's the market of last resort. We actually, they're one of our bigger clients with respect to the California wildfires. A lot of, we're in the process for totals, doing this stick-built valuation. Basically, hitting the $3 million limit. And once we do that, it really doesn't matter. There you go. And so our adjustment, our process may be a little different than, say, the private sector and what they're required to do, because their limits may be much more significant. And so the process changes depending upon the policy. So understand your policy. See if you can deal with a Lou Pippin. See if you can, call. See if there's some bit of reasonableness, with folks. Right, there are occasions, a lot of adjusters use a platform called Xactimate. So, it's very typical in the property section or property sector. You go in, all of this room you can enter in, and it will spit out a number, right? And allegedly, as I understand, Xactimate at least up to about $100,000. Maybe it's a little bit more. But up to $100,000 loss, it's pretty close. It's pretty accurate. And, it's a massive database that, as I understand, is dedicated to the zip code. Above $100,000, I think it gets a little bit looser. And then when we talk about, again, a cat loss such as this, you've got all these surges. Not only from the claims process, but my goodness, there's so many vendors out here, and the cost of wood, the cost of anything to rebuild is going up. Does the Xactimate and the analysis cover that, or is there going to be a gap? The adjuster can plug it in and spit out a number that's $500,000. Well, you talk to your contractor and he says, well, I'm sorry, I can do it for 1.1.
So let me stop you there, because I do want to get to the public adjuster question. I actually want to expand on it a little bit and broaden it to actually Spencer's area of expertise. But what I'm hearing you say, Lou, is you have to advocate for yourself. And in the absence of that, what about the role of the agent or the broker?
I was going to say, can I
Yeah, absolutely.
add a few points into that? At the end of the day, and this might help aid in the conversation from the varying conversations that you're seeing, especially if it's neighbor to neighbor, is, brokers and agent, every insurance contract is a legal contract at the end of the day. And I can't tell you how different those contracts look from one another. So I know there was a lot of dispute on how claims and properties were being handled. Think of it as you're going to a used car lot, and there's every year, make, and model on that lot, and it depends on what you chose to buy at the time that you bought that legal contract. So there's going to be limitations in some contracts that there's not going to be limitations in others. There's some carriers that automatically enroll their insureds in wildfire defense system where, there was a lot of talks about people hiring their own private firefighting companies, which absolutely could be true. I've had clients that have their own fire company to assign to their house. There's other times where it's the wildfire defense system and the third-party service that the carrier is actually paying for to protect their insured's homes because they don't want to see a loss as much as you, the insured, doesn't want to see the loss. So depending on the contract, specific extended replacement cost value, contract language of how you get to, rob Peter to pay Paul within that contract differs quite a bit, and it's not a one-size-fits-all whatsoever.
So I'm going to actually take your public adjuster question and turn it to Spencer. So Spencer, from a legal perspective, and actually each of you can weigh in on this, when's the right time to hire a public adjuster? When is the right time to engage with an attorney? And what does that process look like?
So at the outset of the claims process, you're engaging with the insurance company representatives, and that could be an employee of the insurance company or it can be a third party that the insurance company employs to adjust the claim. And so my recommendation would be to educate yourself, read your policy, avail yourself of the resources you already have. You have an insurance professional at your disposal already in the form of your insurance broker. They're experts in the field. Utilize them. First of all, they're going to be advocates on your behalf if a dispute does arise, but utilize their expertise in helping shepherd you through the claims process as you deal with the insurance company representatives. A lot of policyholders elect to hire, as soon as a loss occurs, hire a public adjuster. And some even will hire a lawyer before a dispute has arisen. And already you're committing a certain percentage of your insurance recovery to these professionals. I'm not certain what public adjusters charge, 10, 15, 20% maybe of your recovery before a dispute arises. And so my thought is use your broker, engage with the adjusters, hire your own contractor as a consultant if we're talking about property losses, and wait until there's an actual bona fide dispute before you consider hiring one of these folks that they're gonna cut into your compensation for what you've lost. Public adjusters absolutely serve an important role at certain times in the process. If there is a dispute between you and the insurance company as to the amount of a loss, and your contractor is telling you, the cost of materials are X, and they're not accounting enough for the cost of materials or labor, or the scope of damage is greater than what the insurance company is telling you, that's perhaps a good time to consider engaging the services of a public adjuster to assist you in the process. I may be getting ahead of myself and anticipating questions, but in all fire policies, personal or commercial, there is a mandatory appraisal provision that a lot of folks don't realize. And it's a dispute resolution mechanism that's available to both insurance company and policyholder in the event that there's a disagreement or dispute as to the amount of a loss. It's a tremendously powerful tool, in my view, for policyholders to take advantage of where there is a disparity in the valuation of the loss. And public adjusters, particularly those, not all public adjusters are experienced in the appraisal process, but a public adjuster that you can hire to represent you in that appraisal process. And for those of you in the room that don't know how appraisal works, anytime there's a dispute as to the amount of loss or the value of property, either side can invoke the appraisal provision. Just simply say, I demand appraisal. And it goes into this alternative dispute resolution mechanism where each side selects an appraiser. Appraiser can be anybody. It could be your cousin. More often than not, though, it's a professional insurance adjuster, a public adjuster. It could be a lawyer. But they're your advocate in the claims resolution process. The insurance company picks one. And so now you have two appraisers that represent the two sides, and then the two appraisers get together and they select an umpire who will resolve any disputes between the two appraisers. And that is a forum, an opportunity for you to sort of bridge the difference without having to resort to litigation. And it's something that, it's a time where when you get to that point where you can't get past an impasse with your insurance company over the amount of your loss, consider invoking the appraisal provision, and that's a good time to hire somebody like a public adjuster to represent you in that process.
So that actually was going to be the question I was going to ask you. So in addition to a right to an appraisal, what rights do other rights do policyholders have in the event of a claim?
Believe it or not, you can always file a complaint with the Department of Insurance. And a lot of people sort of scoff at that idea, like any kind of consumer complaint. It's just going to go nowhere. But I will tell you, the California Department of Insurance is very responsive to complaints that are filed with them. And they will actually write to the insurance company and demand that they respond to a complaint, a consumer complaint filed with the Department of Insurance, and give the insurance company 21 days to produce their entire claim file, which you as a consumer, as a policyholder, you're not entitled to the insurance company's claim file. You're entitled to certain things in the claim file, any sort of estimates or adjustments, things that are upon which a loss is calculated, but you're not entitled to any consultant reports that the insurance company might be getting. But the insurance company has to produce the claim file to the Department of Insurance when they ask for it. And they're going to look at the file and make sure the insurance company is responding adequately in accordance with the California claims regulations, which all insurance companies and claims professionals like Lou have to adhere to make sure they're responding to your claim. So to answer your question, Jeff, another underutilized tool, in addition to appraisal, is filing a complaint with the Department of Insurance. Something else I would encourage any policyholder to do in the event of a dispute before resorting to litigation.
Spencer, are there certain types of claims that are more prone to litigation than others?
Yeah, those that are denied. Though there are disputes along the lines of what we talked about, which are suitable. Appraisal is not suitable for all disputes. If an insurance company denies part of your claim or your entire claim, that's not something you can resolve through the appraisal process. That's something you probably have to litigate. If it's a strong enough dispute, you feel strongly, or your representatives feel strongly, that the insurance company erred in interpreting and applying the policy and denied coverage for a claim, that's something that you can't resolve through appraisal. But appraisal is something that is available where you believe the amount of the loss is X and the insurance company is telling you it's only Y. That's something where appraisal. But those would be the biggest source of litigated claims.
I do want to talk a little bit about the wildfires, and this is a question for all three of you. Biggest lessons we learned, biggest takeaways, FEMA's role, how does FEMA play into this? What were the biggest takeaways we have from the wildfires? Let's start with you, Christina.
Yeah, absolutely. I also want to piggyback off of some of the discussions that we're having now to help maybe differentiate some of this. Broker versus direct writer. So going back, someone had mentioned that, the broker is always going to have the insured's best interest at heart. At the end of the day, we work with a lot of different carriers, and we can bring any one of them to the table that we choose versus working with a direct writer, which would be a State Farm or an Allstate or a Farmers, where those agents are only able to bring that carrier's product to the table. So if you're a State Farm agent, you're only bringing a State Farm contract to the table. Whether you fit, whether you don't fit, whether you kind of fit, that's all you're getting. Going into the public adjusting side of things, I find it to be super helpful with those direct writers, because at the end of the day, if there's one specific carrier that's on the hook for a large amount of the loss, they're, in my opinion, going to try to recoup as much as they can, because they're going to protect that company. On the broker side, we're leveraging our relationship in the marketplace. We work with these carriers. They want to maintain a good relationship with us just as much as we want to maintain a good relationship with them. So you get a little bit more leverage when you're working with a broker, just due to the marketplace and the relationships that we have. The other thing I will say with public adjusters is that, partial loss versus total loss. Partial losses can get very gray and very sticky, because you're not looking at a definite situation, and it's a lot of gray. I look at them kind of in the sense of physical therapists. If you're looking to, put on muscle mass or do leg day or chest or arms or whatever it is, they know the ins and outs of those contracts and the policies to be able to exercise it to the best of your ability. And I would say that in those situations, especially if it's partial, where it gets a little stickier, and I'm sure you could add in, I find that to be extremely valuable. And I would also say that the other differentiator is direct writer versus going through a broker and having them, have the relationships. But going back to, post wildfire and what did we learn from all of this is, there's, again, I had mentioned it before, Mother Nature's not going anywhere, and we need to be in the front of it and have more educated conversations and do the things on the front end. So when it happens, again, the conversations of if I think are out the door at this point, that when these situations come up, whether it be earthquake, whether it be flood, whether it be wildfire, you're somewhat prepared, and that when you're dealing with a high net worth portfolio, or even anybody's portfolio, there's, in my opinion, 3 steps of the process where you're identifying your risks. Every household is different, so everybody's risk exposures are going to be different. Talking about ways to mitigate those risks. Maybe you have a swimming pool. Maybe you have more of an aggressive breed dog. Maybe you have teenage drivers in the house. How do we mitigate that risk as much as possible? And the third part of it really is the risk transfer process. What insurance can we put in place to be a catch-all if we identified, we mitigated, and something still happened? That's kind of the biggest takeaway. And I think for the last several years, as carriers were kind of doing the ins and outs of do we stay or do we leave, and folks, unfortunately, used to that admitted State Farm contract, maybe paid $4,000 or $5,000 a year for their homeowners insurance, being told you're non-renewed, and then it was either pay $20,000 or go to the California Fair Plan. That stuff is out of our control. That stuff is going to continue to happen. So I think working with the right professionals and the right people to stay educated on the forefront, that if you do opt to go to the Fair Plan just because of premium budget, understand what you are purchasing and understand maybe the due diligence that you have to do on the front end in hopes that you never have to touch that contract versus, being renewed with a Chubb or a Pure or what have you. I think those conversations are going to differ, and just staying up to date with what's going on in the marketplace.
From a claims process, what did we learn?
So
In 30 seconds.
Right, okay, go. So now, this process, again, it's a continual effort. Anytime we have a CAT event, it's a continual effort to try and improve our hiring, our responsiveness, the use of technology to help policyholders. When we get into FEMA, so there's the complexity of this event is huge. The coverages that may or may not be available for each policyholder. What we learned here is that the local officials in FEMA are coming along with debris removal. Well, wait a second, so we're not going to pay for that because the local officials in FEMA are taking care of that. You can get into some sticky situations with respect to pollution. You can, things that may or may not be covered, but using local officials to supplement some of the benefits or coverages for policyholders has been a great thing. And I think, finally, from my standpoint, At what point do they take events like this, specifically fire, specifically California, specifically as many problems as California's having, as we're all talking about? You don't want it to become an insurance desert, and you don't want carriers to run away. At what point do they do it like a TRIA, where it's just a true backstop? And so, I mean, we can't handle this. And unless you do preventative measures, unless you do this and that, unless you remove all the foliage around, I mean, you will only have that. And they start voiding that from a typical, fire policy.
From a legal perspective, lessons learned?
Well, it's a little premature for me to answer the question because the legal process is slow and it takes time. It has to work its way through the claims process. But we have learned some lessons from prior wildfires. And one of those lessons just recently culminated in a recent Court of Appeal decision that came down, I think it was last week. And I don't know, it's still too early to tell whether this is going to be, in fact, the law, but the Court of Appeal recently held that a smoke damage claim was not covered under a property policy because the policyholder was unable to show that the wildfire particulates, we're talking ash, char, soot, the kinds of things that, and we're not talking about property that was within the perimeter of the fire. These are properties, miles away that may have sustained smoke damage to the physical structure, or so they thought. But most property policies provide coverage for direct physical loss. The language is direct physical loss or damage to covered property. And one of the lessons we learned that came out of the COVID experience with the virus, there were a lot of claims made for damage to property and loss of income as a result of the impact that the COVID-19 virus had on physical surfaces that required, that they be sterilized and cleaned, and a lot of claims were made that because of the interaction between the virus and physical property, that they were entitled to recover under their property policy. And that took several years to work its way through the court system, ultimately ending up in the California Supreme Court. The California Supreme Court said that no, that the interaction of the virus isn't causing any permanent damage to property because the virus, if left alone, will eventually dissipate, right? And not create any or cause any long-term or permanent damage. Well, from that legal principle, the Court of Appeal last week held that similarly with smoke, unless the policyholder can demonstrate that smoke from a wildfire actually physically altered the property, in this case the structure, there was no damage to property for which the policyholder can recover under their property policy. So what we're seeing is this kind of principle being expanded to things that most of us would think would be covered under a property policy. So it's still too early to tell whether this particular case will hold and stand as precedent for those of us whose homes may have been within the vicinity of these recent wildfires, but perhaps outside of the fire zone, fortunately, but sustained some damage or some effects of the smoke. But that's one lesson that we may have learned from wildfires of years past.
Well, I do want to get to people's questions. What I am hearing, and hopefully what you're taking away, is that this cannot be a passive process. This has to be an active process on your behalf. Speaking for myself, on behalf of Jason and Tim and Greg and Brett and Carl and my colleagues in the room on the risk management side and Allison on the employee benefit side, for our commercial customers, we do that for our customers. We advocate on their behalf. But when you're sitting at home with your dogs and your children and your significant others, thinking about Are we protected? Make sure this is an active process. Reach out. To that end, I don't know, Brooke, do they have these on the table? Okay. You heard a lot today, and I didn't see a lot of writing, which is good, so you're paying attention. Everything you heard up here today, we have resources on this USB drive for you. Resources, links to everything that you've heard from all three of our experts up here, including contact information. So if you had a question that you didn't want to ask and didn't get time to ask here, please find us on here. I do want to actually call on someone in the room who has forgotten more about insurance than I will ever know in my 32, going on 33 years, Mr. Gregory Econ. Mr. Econ is the senior statesman at Venbrook. He is a very dear friend of mine, but the dude knows a lot. When I have a question, I say, Greg, what do I do with this one? And I lead a division like this, so that's how much this guy knows. Greg is also on a committee with Caruso, a very elite committee to help move LA forward. Again, a feather in Venbrook's cap, so thank you for what you're doing there, Greg. What can you add to this conversation from your perspective?
Having sustained a loss puts me in a little different position because now I'm on both sides of the ball, if you will. So being on the claimant side, fortunately I was covered by Venbrook. And as a result of that, I'm fairly confident that I'm going to be compensated appropriately. So on the other side of the coin is, you have to talk about the coverage. And it was an interesting comment that you made that the proximate cause of the loss, which was direct physical damage to a structure, but the proximate cause, in fact, was fire, yet smoke damage is not covered because it was not specifically affected by that particular homeowner, or whatever the case may be, whatever the physical damage was to the property. So in the past, I thought, and Lou, maybe you can expand upon this, that even though you didn't have direct physical damage, smoke damage was considered to be a proximate cause and therefore a covered peril and therefore covered. But I guess as a result of what you said today, it isn't. So that's just one of the things. I learned that today. So dealing with all of the different entities, all the different insurance carriers, I've been speaking to a whole hundreds of people actually. And one of the things that's really impressed me was the fact that no matter what the situation was, no matter who the carrier was, the carriers have actually been very good about this. Everybody's said nothing but positive things about the carriers and the way they've responded to these losses. And that's been very gratifying for me personally. Not for my personal loss, but I mean personally just to know that we're in the industry and the industry is responding accordingly. And I think that the industry should be applauded thus far for that. So there are a lot of complications that we're all dealing with. One in particular, another one is going to be when you have the additional living expense. When that runs out, what do you do? And everybody's obviously scrambling. Everybody's scrambled to find places to live. And without really thinking about a regard to, wait a minute, that's a finite number. And what happens when I'm out of that? And I'm in this place. It's $30,000 a month because it was the only thing I could find. But I had $1 million of coverage. What's going to take 4 years to repair your home? What are you going to do? So there are a lot of these long, far-reaching ramifications to this loss that are going to be extremely unique and probably commonplace, if you will, in Florida. But we're not accustomed to that here. We've never had anything like this. So it's really been an eye-opener for me, and I know for a lot of our clients and for those of us in the room today. And I just want to thank you, Jeff, for putting this together. I think you've done a very good job in moderating this. And Christina, in particular, I hadn't had a chance to meet you before, but I was very impressed with the way you were responding to all the questions. That was very, very good.
Why, thanks,
and
Greg.
Lou, well, what can I say about Lou? I have to be nice to Lou because he's going to be handling my claim. Okay,
Greg.
Lou, you're the best.
Claim paid? Come on.
Thank you for making us.
So thank you, Greg, so much. I appreciate that. And it may sound self-serving, but I do want to thank Venbrook for helping us put on this event. This has been eye-opening for a lot of folks. Just to make a shameless plug for Venbrook, one of the ways, and I mentioned it earlier about thought leadership, this is not just about risk management. This is not just about buying insurance and navigating through the insurance space. Venbrook prides itself on being true leaders in the community as well. It's not just about business, right? It's about helping LA move forward. Part of what we're doing is working with our insurance company partners and garnering their resources. These are monster companies with a lot more resources than Venbrook has. But together, collectively, we are organizing, through the help of Brooke and her team, donations of cash, donations of goods, volunteers. We're doing an event tomorrow. So please, I encourage you to talk to Brooke. Is it on the drive too?
There's information about the.
There is information on it, fantastic. And if there's not, please reach out to us and say, how can, if you feel so inclined, how can we help you guys move LA forward? Because sure enough, we will, by hook or crook, get this city back on its feet again. I want to thank Christina and Lou, of course, Spencer. It's always good to have you. You guys are fantastic, a wealth of knowledge. Thank you for your time. There's food, there's drink. I really appreciate you guys coming. Help yourself, and again, thank you for coming.